is we're going to be looking at FOMC in post, right? And just how wrong I was actually, right? Um, the beautiful thing about it is, one, I'm not afraid to admit that I'm wrong, but not only because I think that it's good to talk about your losses, but I mean, am I really wrong if I didn't get into anything? I mean, think about it. I could talk about a loss if it didn't lose. I mean, think about it, right? So what we're doing is we're gonna be looking at USD CHF because that's what I really wanted to see. Right now, the reason I didn't take it, I had a really really bad headache. If I'm being quite honest with you, right? And let's kind of figure out what happened. Now, take a look at this. All right. This morning I said that USD CHF, I'd like to see price push up into this area, reject the area, and then fall away, produce that, that kind of that stumble, and then continue to drop off. All right. Look at what happened. It did indeed go up to this area. All right. It went up to this area, and then it played in this area for just a little while, not very long. But what do you think happened here? Obviously, now I want to stick a pin right here. Obviously, I would not sell this. I would not sell this, right? This, y'all know that I don't sell the trend line. So even if price did go up and reject and fell away, I would not have just sold. That's why I would have waited, and that's why here's circle. I would have waited for, the push, the pullback, and the accumulation, confirming to me that the direction is then down, right? So again, is it that I'm really wrong, or is it that I just got the direction wrong? Didn't take the trade, right? Because it never set up what I wanted it to do, right? You can literally see here, this is what I wanted it to do, and it never did that. So therefore, no setup, no trade, right? But think about all of the traders, every last one of them. What do you think they would have been doing here? What do y'all think? Based on what you're seeing, what do you think they would have been doing here? That's correct. Not just resistance, they're selling the trend line. All right. I guess they'll be selling the resistance as well, but they'll be selling the trend line more often than not, right? Because this is a double confirmation here. It's both resistance and a trend line. All right. And that would just basically cause everybody to sell. Cool, no problem. But then, beautifully and sure enough, FMC come in clutch and just shift the market in a buy direction, right? Now, I want you to tell me what direction, and again, remember I took buys. I took buys on USDCHF yesterday and it stopped me out, meaning I was looking for buys, just didn't get the entry, all right? My direction originally was buys. What direction do you think USD is going now? What y'all think? Based off of, let's just say this was FOMC here, right? The very next candle, right? What? Look at that. What direction do you think USD is going now? If you had to guess, if let's just say you were completely blind, right? And all you could see is up or down. If you had to guess, what direction would you see USD as going? People still saying sells? I doubt. I doubt. There's absolutely nothing about this candle that says sells. Absolutely nothing. If you're saying sells, then you might need to, maybe clean your glasses a little bit, because what about this says to sell? No disrespect, but what about this says to sell? This candle, this one candle, 89884 to 90438, right? This candle alone is 60 pips of pure buying momentum, just raw buying power, right? What direction is it going? It's going up. Nothing about it says to sell. Now, again, if it did what I wanted it to do, we could maybe reconvene and reconsider. But this is very important. Now, let's take a look at that on the lower time frame, say the 1 minute, all right? We go candle by candle. And maybe I even see this red candle here, 10 pip stop loss. Let's see what it does. That's how you capture residual momentum. 30 pips plus, effortless. Effortless. That is an easy residual 45 pips effortlessly, right? I think it's even more than 45 pips. It went ultimately 50 pips, a residual 50 pips. Just from literally capturing, the direction, right? Again, very dangerous, right? Because again, it is, it's essentially, you're using post news, and anything can happen post news, but you're risking 10 pips. You should be able to do this. And this is just on USD CHF. What about on UCAD? We wanted the same or similar setup on UCAD, right? We wanted a similar setup on UCAD. So let's see how that looks. All right. All right. So let's go. So similar situation. Remember I said I would like to see price go up into this area, reject it, and then, the first ECR out of the rejection, then boom. But then it never happened. It broke this area completely. So that being said, if this is the structure that we're looking at, right? Let's go candle by candle. Next candle, boom, one big move. 1 minute time frame. Let's go candle by candle. I'd say right there. Buys right there. All right, buys right there. 10 pip stop loss. Let's see what it does. Am I allowed to stay in the position? Let's see. There we go. Gone. Residual 50 pips. Gone. This is if you wanted to scalp it, obviously. All right. I've been doing a lot of 1 minute time frame recently because, people constantly asking me, bro, how do you e-scalp? How do you e-scalp? How do you e-scalp? Well, this is how you do it, right? You capture an easy residual 50 pips based off of the moment. It actually went almost 60 pips, right? So you could have captured 50 on USD CHF and almost 60 on UCAD just by realizing that the residual momentum, right? The momentum after FOMC, you could have used that, right? What about EU? All right, so let's go back. Why do you buy there and not wait for? I keep telling you all guys, there's no rule, nowhere I say that price has to touch the moving average. Depending on the moving average you use, trust me, you're gonna realize that price very rarely touches that moving average. Very rare price is going to touch that moving average. And if it does, it's a very good sign, right? It's a very, very good sign that price is probably going to test that moving average again, right? So let's go. And then the next candle, boom. What direction is it going? What direction does EU want to go? It broke this zone here. What direction does it want to go? Down. Let's see. 1 minute time frame. Am I allowed to take the trade? Am I allowed to take a trade and stay in this position? Red candle. Black candle, sorry, my bad. Right there. Sell your sell. Sell. 10 pip stop loss. Am I allowed to stay in this trade? All right, so I would sell it right. Oh, my bad. I'd sell it right about there. Why can't I do it properly? I'm trying to get this on the candle. All right there. As I sell it, because obviously you sell a buy candle. Let's see what happens. Am I allowed to stay in the trade? Boom. gone. EU just literally dumps. By literally following what? Residual momentum. Oh gosh, why did I do that? Ugh. All right, let's fix this again. So where did I enter? Was it right somewhere here? All right, here. Yeah, I've seen it now. All right, I entered right there. All right, and then we drag this down. Let's see. Was I allowed to stay in the trade? Yes, I was. Residual momentum give us another 55 pips on EU. All right, on EU. So you're up. So again, this is assuming that you only take in one, but let's just say you were able to split up your positions. You split up your risk. You want to risk 1% overall. So you split up trade EU, USD CHF, USD CAD, and you split up those three different trades into 1%. You could do that, right? You could do that. This would allow you to actually take multiple different trades, right? Increasing your chance of success, obviously, right? But still basically having the best possible risk management, right? Absolutely, right? Absolutely. What about GU? Wait. Let me go on 15-minute time frame, right? So let's go. So just to show you I'm not cheating, I don't know, I just saying, right? Candle by candle, 50-minute time frame. The very next candle, boom. What direction does it want to go? That says to me one thing and one thing alone. Sell, 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 sell. 1 minute time frame. Let's see. Wait for your pullback. Yeah, I think maybe right there. Yeah, I think maybe right there. Sell right there. 10 pip stop loss. Maybe this might take me out because this is GBP USD. Let's see what it does. Nope. Drop to shit. Right? Literally drop to shit. Right? Drop to shit. GBP USD, it would have given you another 55 pips. Easy, effortless. Right? Somebody Bitcoin. Okay, so someone says Bitcoin. I wouldn't have used this for Bitcoin though, just saying, right? On Bitcoin, this is ridiculously hard to do on Bitcoin, especially currently, right? Honestly, I wouldn't try this, right? Why not take the higher entry on the first pullback? What are we talking about? Um, on GBP USD, moving average might not be ready at that time. All right, so let's go. All right. So let's say this. All right, we go 1, 2, 3. All right, let's go back on the 1 minute time frame. This is what you're talking about. At this point, I don't know how the momentum is. And then this is literally one candle up, one candle down. How do I know that it's going to stop here? You could actually see based on the size of the candles, all right, when price is beginning to stall. Look at the size of these candles as opposed to, look at the size of these candles. You understand? You could literally tell that, this could have kept on falling back because remember, it is literally right after the news. The news would have been this candle. This is 1, 2, 3, 4, 5, 6, 7, 8. This is 10 minutes after the news. You know how volatile price is after 10 minutes after the news? You can't trust that. You cannot trust that, right? If you got in before, that's something different, but you can't trust this. Trust me on that, right? I would not have used this for Bitcoin again, for obvious reasons. Bitcoin is just so ridiculously, so stupidly ridiculous. Somebody said to check gold, right? Okay, so obviously we know gold just literally did the most, right? So this is the news candle for gold. So let's see, would I be able to use this? So we go 1, 2, 3, and then I think it's that one. Let's go on the 1 minute time frame. Let's see what we can do if we can capture anything. So we're going candle by candle. All right, pull back. I want a black candle. Okay, right. Let's stick a pin right there. See that? What is this telling us? What is this telling us? Should we enter? Let's examine the candles. Should we enter here? Why? It's telling me momentum. All right, we're waiting for a black candle. Should we enter here? Maybe. Let's try. All right, let's try. Because it shows rejection. 10 pip stop loss. Let's see if we are able to do anything with this. Been stopped out. Cool. So we lose 10 pips. Then you see, next candle, momentum again. All right. Big momentum again. Big momentum. Falling back away. You can try this, but I would not advise this. You could try using this candle here, but I would not have advised that because again, it's definitely bullish here. This red candle could be telling me that it's ready to fall away. This is where candlestick anatomy is very important. What kind of candle is this? What kind of candle is this? It's an engulfing candle. It's also a Maribozu candle. So it could be a sign that price is beginning to fall away. Let's see. No black candle yet to enter, so it's falling away. Don't have an entry. It's falling away. So this one obviously, so let me just adjust this here. So this would have stopped me out, right? Cool. All right. Yeah, Maribozu, right? It's an engulfing, but it's a Maribozu, right? It could have wicks, but it's very, very small, right? Interesting. So you have your bearish engulfing. There's some bear momentum. Price pushes back up. Interesting. What should I do? I could chance it again. Should I chance it? Why not? 10 pip stop loss again. This is gold. You're going to have losses, right? You're going to have losses. So 10 pip stop loss again. Let's see what happens. Am I able to use it? Right away. All right. Maybe this one comes back up and takes me out, but that's 25 pips there easy, yeah? So if you wanted to, this is a zero drawdown entry, and if you wanted to, right, this would have literally just allowed you to take 1 to 2 risk to reward and done. So this loss that you had here, gone. Let's see. Continuing, it's still going to drop. It's the kind of pullback, right? All of a sudden, now we're up 40 pips, right? It's pulling back. So we're floating at about 23. If you want to close it, you could close it. All right. Come back to your entry, but it didn't quite take you out. All right. Examining this candle. What does this tell you? Now, I don't know because I don't know the structure, but what does this tell you? Very good. Rejection to the high. Boom. Very next candle, shit the bed. That's back to 45 pips profit. Rejecting, more profit again, right? That's 50. That's 70. That's how much? It went down to 80. It's floating at about, at this point, it's floating at about 50. 70. And then by this point, you know the momentum has already taken over. Let's see, would I have been taken out of this trade? Nope. Would have tried to come back to my entry. Let's see. Again, try to come back to my entry. Right? You hold it. This is gold. Oh, okay. All right. Boom. Boom. Lose 10 pips. Make 363 pips. You think I care if I lose this 10 here? Just by understanding candlestick anatomy. By following residual momentum. By following the original direction. Do you think I care? This, I mean, I didn't take it, but I could have if it is I was awake. I would have definitely tried to scalp this. You realize that this is 36% on a 1% risk, right? So you risk 1% of your account. Cool. So let me just say you have a $200 account, right? $200 divided by 10,000, that is 0.02. 0.02 multiplied by 10 pips, that's $2. So you lose $2 on this next trade, right? Cool, no problem. So from your $200, your account is now 198. 198 divided by 10,000, that's 0.01. Cool, no problem. 0.01 multiplied by 363 pips, that's $36. You lose $2 to win back $36. Oh gosh, come now, man. Come now, man. Let me be real. The bank, listen, I logged into, I have accounts with different banks here in Trinidad. I logged into my online banking on, on one of the banks that I'm with here now. I realized that I had an account. I literally had an account with like $13 in it or something, from when I was literally like a little boy. You understand? I just literally drained that account. I didn't use that bank anymore. But I was trying to clear out some stuff in my browser, and I was like, I log in, I was like, hey, I still have this. When I see $13 in your account and every month they're giving me, you know how much interest they're giving me on that? 1 cent. 1 cent on a $13 account. Come on, man. You know what percentage gain that is? That ain't making no sense. This, what you're doing here, is how you make money, my friends. All right? This is how you make money. This is how you make money. You realize this is 363 pips. And this is with me showing a loss. Again, I'm not hiding it. I would have lost if I took this first trade. But I don't care. I don't care. I'm literally trying to understand how the candles are operating. What candle to enter on? Why should I wait? Wait for the black candle. Wait for the buy candle. You understand? Because if it is just sell low, obviously it's selling here. There's a chance for it to come back and take you out. Look at what happened. Price literally came back and tried to hit my entry or tried to take me out. You hold it. This is gold. Hold it. This is 360 something pips. So on top of the excuse me, on top of the 55 on EU, the 50 on USD CHF, the 60 on UCAD, and the 50 on GU. By the end of the day, you are up over 500 pips. You are up over 500 pips. Easy, effortless. If you're entering on the 1 minute time frame and you're scalping, I said this multiple times, when I'm scalping, I will only trail if I know that I'm going to be holding it for a very long time. This is a matter of, a few hours, right? I would have tried to trail this, but the thing is, I would not have trailed this until I saw that, because the fact that price fell away, it fell away like about 80 pips, that's nothing for gold, and then started to pull back. I would not have trailed until I know that price started to actually breathe. When I saw price pull back, try to come for my entry, and then start to push off again, then I would have trailed. You understand? And I start to trail. By that point, by the point gold already up 300 something pips, my stop loss would probably be somewhere in this vicinity, somewhere there, which is about 80 pips profit. Worst case scenario, I would hold it until it either takes me out at a minimum of 80 pips profit or continues. So yes, I would trail it, but only if I know I'm going to hold it for, I'm going to turn it from a swing, from a scalp into a swing. All right. If you wanted, as I said, if you wanted, you could have took it, you could have closed it at 1 to 2, 1 to 3, 1 to 4. But if you held it and just literally you're hodled according to what people say, you would have been able to actually capture a lot more than if you just closed it prematurely. Again, if you're not comfortable with holding the trade, you could literally scalp this for 80 pips and take that and run. That's 1 to 8 still. How many people, how many traders do you know that can scalp? 1, not only effectively, but 2, with them kind of risk to reward ratios. How many traders do you know can get those kind of risk reward ratios by intraday trading? by swinging where they would have a 1 to 8 risk to reward. How many traders do you know that can do that? And you all saw it here live. This is what I would have done if I traded this. That's where I would have entered. I would have lost this, no problem. Then I would have tried it again because it's gold. I know that how volatile it is. I know that I'm bound to maybe lose 1, 2, 3 trades. It's fine. But when you have the potential to make 80, 90, 200, 300 pips, losing 10, it literally feels like a mosquito bite. Not so? What y'all think? It honestly feels like a mosquito bite when you think about it in retrospect. That I'm willing, and I say this all the time. I say it all the time. That's why I'm not afraid to talk about a loss, right? I'm genuinely not afraid to talk about a loss, even though I didn't trade it. If I did trade this because I was awake, I would have taken a loss on gold the first time, and I'll probably try again and then make my money back. You understand? But how many traders, one, can talk about a loss and then try again and then actually get the profit back? Very rare. So what's the difference between re-entering and revenge trading? Good. Very good question. It's not only the emotion, right? It is the way in which it's done, right? In the regard that you aren't thinking clearly. You say, oh shit, this thing take me out. So you just jump back in it right away. You're not even studying what are the candles doing. You notice what happened. I realized that, okay, maybe this is the candle here to enter on. Boom. And literally the very, like 2 candles after, it took me out. So I say, all right, no problem. Cool. And I wait and I sit and I watch. I say, okay, cool. The next candle definitely looks to be bullish. So I wait. And then the next candle is bullish. And then the next candle is bullish. So I wait. I say, all right, I'm not going to try to enter here because this can literally just keep going up. It falls away. It's engulfing. I'm actually monitoring now the anatomy of the candlesticks. I literally trying to dissect the candlesticks. I'm not thinking based off of emotion. I'm thinking based off of fact. What is the candle doing? Why is the candle operating so? Right? So I'm not revenge trading. I'm essentially literally doing what my job says, what my job description says. I am technically analyzing or technically analyzing the candles. You understand? Technical analysis, that's what I'm doing. So I watch and I say, all right, cool. The next candle, bearish, right? It rejecting, it come back. Right. Interesting. It engulfed here, right? But then you could say, well, this one engulfed, so maybe you're going to go back up. Take your chance. You never know. You can't win the lottery if you don't play the game. All right. I would have been willing to lose this again. You know when I would stop? If I lose this 3 times in a row. That's when I would stop because it's gold, right? I would stop. I'd say, all right, so this one comes back, it takes me out, boom. All right, and I go back in again, I analyze, boom, it takes me out again, I'd stop. Even if it is, I realize later on it starts to push off, I would stop. Because what it's telling me is it's too volatile for me to try to take advantage of. If every single time I enter, it literally snaps and takes out my stop loss, it's telling me that 10 pips is definitely too tight at this point in time. Run away to come back again another day. Simple. It's very simple. I lose 30 pips here. Run away. It's very simple. Many traders they can't do that. They will lose 10 pips, gone. They try again. They lose 10 pips again, gone. They try again. They lose 10 pips again, they try again. They lose 10 pips. And so before you know it, you're down 80 pips. And this is why I tell you all, there's a very distinct difference between me and a lot of traders, because it is very rare for me to lose more than 2 to 3 trades in a row. When I do that, what do I do? And you all know this. What do I do? When I realize that I'm losing plenty trades in a row, what do? I come out in the open and tell you, yo guys, here's what's going on. It looks like I'm having a problem with my vision this week. And honestly, I feel like I've been losing a lot of trades and I think I'm going to take a break for the rest of the week. Do I not say that? Do I not say that? I physically tell you all, here's what's going on. I'm not able to keep up with the kind of trades that I'm taking. And you know what? I think the best course of action is for me to pull back, you understand, and take a break. Maybe a reset, relax. Maybe something is bothering me. Maybe something in the back of my subconscious and the back of my mind, is weighing heavy on my soul right now, and it's causing me to have my vision be clouded. So in light of that, I'm not able to take proper trades, and the best course of action is to stop trading. Simple. It's very simple. Yeah? What do you think? Nice. David says, say over leveraging and the first one took you out and you try again in the second one and third over leveraging, or would you drop your lot? No, right? If I am like, you see, especially when I'm using high leverage, high risk, I will be even more careful of that fact. You understand? I probably would stop by the second time because I know if I'm risking big amounts, you know, it causes me to basically lose more of the account quicker. And I'd be a little more careful at that point, right? I'd be a little, especially with something like gold. You see, notice how tight. Watch the stop loss here on gold, right? Look at that. You could barely, if you zoom out, you could barely see the stop loss. Look at the difference on, say, something like EU, right? Look at the difference. Wait, I didn't have a thing. Right. Look at the difference. So you see that my risk, even though it's the same 10 pips, right? At least I have a little more buffer room for my stop loss to, basically for the trade to breed, right? That is a mistake a lot of people make. They feel like everything is the same, and that's a mistake because I always say treat each pair as a different entity. Each pair has a different personality, the way that they operate. EU would always be a safer pair to trade than gold. Always. Both of them drop. One dropped significantly more than the next, but the risk on one would have been significantly safer. And thus, EU would have been the safer trade to take in this case. This is still a 5% gain on a 1% risk. Not so? What do you think? I oftentimes laugh at people who say that you shouldn't even be risking 1%. So what should you risk? What should you risk? Right? What should you risk? I saw that someday, somebody said, they say risking 1% is too much. So what should you risk then? What should you risk? How much should you risk? 0.01? How do you even do that? How do you even do that? Come on, man. Come on. You understand? 1% is absolutely safe. Because if you realize that, in this game, risk is a part of your exposure, and risk is a part of what you need to grow the account, you'd realize that 1% is actually very sufficient to grow your account. Because again, think about what I'm telling you. 1% risk on a say $10,000 account is how much? 1% risk on a $10,000 account is how much? Come on, quick maths, $100, right? But what is 36% gain, right, on a $10,000 account? Very good, very simple. $3,600, my bad, right? Very simple. You telling me on a $10,000 account, you literally bugging to risk $100. You shouldn't be trading. You should not be trading. Long story short, if it is that bothers you, you should not be trading. I did a session some time ago on your risk tolerance. You understand? Being either risk averse or risk savvy, right? As a trader, especially as a forex trader, yes, being risk averse, meaning you're slightly less tolerant to risk, is fine, but you still have to acknowledge that risk is a part of it. But the better traders typically would be more risk savvy. I'm not saying go balls to the wall and just risk everything, obviously not. But you need to understand that no risk, no reward. So if it is you're bugging to risk $100 out of a $10,000 account, you're going to have problems. That is a fact. You are going to have problems, especially in the growth process, especially if you want to use Forex as an income, all right? Or even decide to grow the account, you're going to have problems. How do you expect to grow when you aren't giving up anything in the first place? This is why what we do is called trading. You have to give something to get something. Does that make sense? In the real world, think about it. That's what bartering is, You understand? You go to buy something from a store. You have to give something from your pocket to be able to get the item or the service. You understand? You barter. You have to give something of yourself. You work hard for your money. You want to buy this bottle of juice. All right? You want to buy this bottle of juice. You work hard for your money. You have to give some of that money for the bottle of juice. You can't just walk into the store and say, well, I think I should pay this amount and still get the bottle of juice. They'll watch you like you crazy and chase you out of the store. There's a set price for this amount of juice in this bottle. Pay the risk and then take your juice and go away. It's very simple. Make sense? So in other words, it's a lesson on taking the risk. Sometimes you lose, sometimes you win. It's another reason why in businesses, when you're looking at the accounts department, right? When they're doing their balance sheets and stuff, at the bottom of the balance sheet, you would see closed P&L, or you would see monthly P&L or annually P&L. P&L stands for profit and loss. Companies have to account for their losses. Because guess what? In business, you're going to have losses. That's what this is. A lot of traders look at Forex as a side hustle. You understand? As a hobby. It's not a hobby. It's a career. And if you treat it like a hobby, you get results like a hobby. You treat it like a career, however, you get results like it's a career. You get compensated like it's a career. You understand? Remember, you are the CEO of your own trading business. You are all CEOs in your own right. Yes or no? What do you think about that? Feel good to say that you're a CEO, and say that. I want you to say that. I am a CEO. You are a CEO. Absolutely. Right? CEO don't mean that you have to be making millions of dollars. It means that you are the man in charge. The chief executive officer, you are the man in charge. Now, what you make obviously is dependent on how good your business does or not. But it is what it is, right? And that is the point, right? That's why I've made, so many different sessions on risk management and all of that. It's very simple, It's very, very simple, right? You would have seen where I would have taken a hit on that first trade on gold. That is fine. Put it on the balance sheet, no problem. On the P&L, lost 10 pips. But then right there, you would actually also see plus or gained 360 plus pips. So I hope that this made some sense to you. I hope that it sparked some kind of system in your mind to realize that maybe you're not looking at risk the correct way, right? I've said this multiple times. I am willing to lose 2, 3, 4 trades, all right, just so that I can get these kind of trades, because these are the kind of trades that actually grow your account. You understand? And if you have your risk management parameters correct, trust me, you are basically ahead of the game. You're ahead of everybody else. Because what a lot of people do is essentially they open their trades, they lose, they open the next trade, they win. The next trade they lose, the next trade they win. The next trade they lose, the next trade they win. And then they lose, win, lose, win, lose, win, lose, win, lose, win. You know what happens? They basically end up spinning top in mud, because the account basically just either floating at break even or just a little under. Because when they lose a set amount of pips. But when they win, as soon as the trade goes into profit, they close it. So you're losing 20, 30 pips, but as soon as the trade go 10 pips in profit, you're closing it. Why? Why are you doing that? Allow the trade to do what it have to do so that you can make the money based on your risk that you have already set out. That is it. That's literally it. Yeah? So this is a lesson on how you could literally have risk between, so what, your risk 5%. So let's count it up very quickly. So on AUD USD, your risk 1%. So that's 1, right? So did we take this? No, we didn't take this. Right? So we'll omit AUD USD. So we're looking at EU, right? So let's just say you took EU. This is 1% your risk, right? Then you took GU, your risk 1%, right? You took UCAD, right? Your risk 1%. So that's 3% so far. USD CHF, your risk 1%, that's 4%. On gold, your risk 2% because you took 2 trades, right? You took this one here and this one here. So that is 6%. All right? 6%. On gold, let's just count it here. On gold, you got back 36% plus. On USD CHF, you got back 5%. On UCAD, you got back 5%. On GU, you got back 5%. And on EU, you got back 5%. All right, plus 5. So you risk 6% to get back 56%. That's essentially what it is. You risk overall, let's just say you did take all of these trades. Obviously, I'm not advising that you do that, but if you did take all of these trades, essentially, you would have risked overall, you would have risked 6%, right? And you would have got back 56%, all right? 56%, you heard that correct. Yes or no? Close 1 to 17, I would have left my stop loss at 10 pips. It would have went 100. Yeah, I know, trust me. And that's why I always tell you guys, don't close. So guys, I really hope that, this made some sense to you. Obviously, again, I'm not telling you that you risk 1% on all of these trades because that's a lot of risk. It's 6% risk is a lot. If it is, you're still learning, you're still practicing, you're still trying. But I'm just saying, all right? If you did, trust me, you'd be up quite a bit. All right? You'd be up quite a bit. Yeah? Everyone good? Any questions? Excellent. Please check GJ. Let's see. On the 15 minutes. Not seeing anything yet. It's not in enough bear momentum for me to consider selling. So not yet. Gold. Possible wick fill on gold. Let's see. Previous D candle. Yeah, why not? But not yet. Definitely no entry just yet. All right. Oh, by the way, you all remember I said gold was going to 1840? Well, shit me. Gold got to 1804. Right? Wow. You could imagine if I had stayed in this position, if I was allowed to stay in this position. Oh, come on, man. Come on, that's 700 pips, man. All right. If I was allowed to stay in this. Come on, man. All right. I mean, it is what it is, but I digress, right? Do you think AU has potential to move at news in 2 hours after FOMC? Do I think AUD/USD has? Is there another news event coming? It probably is going to continue in this direction. I'll be honest with you, but I wouldn't try to do anything. I honestly wouldn't try to do anything. At least not yet. Allow the market to catch itself. You understand? Allow the market not to correct. I don't like using the term correction because correct insinuates that the market was wrong, so it has to correct itself. I think just allow the market to catch itself, right? Allow the market to rescind, right? And breed, right? I wouldn't try to trade anything tonight, if I'm being quite honest. I wouldn't try to enter anything, right? I would allow the market to do what it has to do and call that George, right? CHF JPY, no accumulation, so I would not chance it, right? It probably is going to sell, not before coming back a little bit again, right? So guys, if there aren't any questions, again, I think I'm going to close off this session now, right? If you are going to be taking any trades tonight, even though I don't advise it, if you are going to be taking any trades tonight, please practice proper stop loss placement and proper risk management. Guys, have a great night. My next session will be at 9 a.m. Atlantic Standard Time in the morning, unless I say otherwise. Other than that, guys, have a great night. Have a peaceful night or whatever time it is by you. And I'll see you all in the next one. Peace, guys.